Welcome back, you legends. I'm Dr. Cal. Let's get right into this video. This is going to be a quick update video for the upcoming trading week. The market is expecting about a $9 move to either direction this week, guys. The upper expected move is sitting at 401.5, and the lower expected move is sitting at 382.5. Just about. We are still sitting on top of this support line, guys. We haven't taken out this support line just yet. My expectation going into this week, guys, is for Tuesday to see some selling, perhaps to break the support line, flush a lot of positions, and then bounce back above the support line and hit the upper expected move. And I think that's going to happen for a couple of reasons. The first is seasonality, guys. We tend to have a minor bounce back up to the upside in the beginning of September after this massive sell-off towards the end of August, early September. And so we are due for a bounce back up based on seasonality. In addition to that, guys, this move to the downside was very aggressive and very quick. And again, we're due for a bounce back up. If we take a look at the 2-hour chart, for example, guys, we do have a bullish crossover on the PPO right over here, and we are still in bullish territory on the 2-hour chart for the PPO. And my expectation, guys, is that for a brief flush to come, flush out all of these stop losses below $390, and for the PPO to form a slightly higher low, forming a double bottom with a divergence on the 2-hour chart. In addition to that, guys, we have another indicator that is tipping us that we'll probably see one lower low on the S&P and one higher low on the HYG, forming a divergence. And this is the reason, guys, Friday, high yield bonds, risky bonds, junk bonds, the smart money put in a higher low versus the trading day of Thursday. And on the S&P, guys, we put in a very slightly lower low right over here, taking out the low of Thursday. And so we're starting to see the beginnings of a divergence between the HYG and the S&P 500. And if you guys have been following this channel for long enough, you know this is one of my favorite signals to track, and it's divergences between smart money and dumb money. The divergence between stocks and bonds. And it's very often, guys, that the smart money gets it right. And so, guys, we're seeing buying in the HYG, and we're still not seeing that come into the S&P just yet. And so again, guys, my expectation is for a flush down, a low that takes out these lows, takes out all of the stop losses. And I expect this flush down to settle perhaps right around $387, $386. And this is why, guys, I think we'll retrace possibly all the way down to these levels right here, this pivot level right here at 386, perhaps just a little bit over that. I do not think we'll hit the lower expected move, but that's still possible. We could hit the lower expected move. That's just not my assumption. And that's also based on the Fibonacci retracements of prior sell-offs. Primarily, guys, this sell-off right here in late April, early May. Here, let me put the top at the 1 level and the bottom at the 0 level, and this retracement right here at 0.236. Let me take this, put it over here, guys, and let me do the same. And look at that, guys, the 0% line comes in at 387. We also have this pivot, small pivot zone right here. The only worrying fact that could see us tag the lower expected move is the fact that we have one enormous air pocket in here. And what do I mean by that? Let me show you what I'm talking about. Let me add the volume profile on here to show you what I'm saying, guys. And look at that. We have this very obvious cluster of volume of buying, selling, a lot of trading volume. We have another cluster right over here and one other cluster right here. Between these two clusters, guys, we do have this air pocket, and that air pocket does worry me. Usually, guys, in air pockets like this, we see a price move very quickly in either direction because there's not a lot of trading volume at these levels, and so price action moves very rapidly in these zones. And so that's the only indicator that's telling me that we could see a tag all the way down to 380 to $383, right around those levels. Other than that, guys, I think 386 to 387, right around these levels right here, is a fair target to look at for a brief flush down, taking out all of those stop losses, and for the stock market to start moving back up all the way to tag the weekly expected move. Taking a look at the ES, the futures market is open today, but the stock market is closed because it's Labor Day. Happy Labor Day, everybody. We're not seeing really any meaningful movement in the futures market just yet. And I do not expect really any meaningful movement today, but I expect a lot of volume to come in tomorrow. And the way I'm looking at this, guys, is through the weight of the evidence approach. And the weight of the evidence, including the bullish crossover on the PPO, as well as seasonality, as well as the beginnings of a small, right over here, a small bullish divergence between the smart money and the dumb money being the S&P 500 and the smart money being the bond market. I think we're due for a bounce to the upside. Let's take a look at the triple Qs, guys. The weekly expected move is sitting at the top at 304.5 and at the bottom at 285.79. Again, guys, with the triple Qs, I'm expecting really the same thing to happen. I'm expecting a flush down, possibly to the $290 level, perhaps even lower than that, to fill this little gap that we have at $289. This move to the downside, guys, on the triple Qs would be, let's see, about 1.9%. And on the S&P 500 to go down to our level at $286 would be around 1.5%. So that makes sense, right? A 2% down day on the NASDAQ and 1.5% down day on the S&P. From there, guys, I expect the triple Qs to actually rally all the way up to the weekly expected move. Now I want to get into oil. I was waiting for this to happen, right? I was waiting for the OPEC Plus meeting to take place, and OPEC Plus has agreed to make a very tiny oil production cut of 100,000 barrels a day. That's 0.1% of global supply. So it's really a token supply cut, but it sends the message that OPEC Plus is prepared to cut production to maintain oil prices. And look at this, guys. Oil is now bouncing back up off this news. Whether the market likes this news or not remains to be seen. I tend to believe personally that we'll see a brief bounce back up in oil and another rejection, and we'll move down. That's just my interpretation, because I think that production cut is way too small to make a difference. And with China slowing down, shutting down again, as well as all major central banks in the global stage continuing to raise interest rates, I think oil will continue to see pressure. But we'll see. Oil is now consolidating, making a very, very ugly looking consolidation. We're not seeing this consolidation make any meaningful decision to either direction, the upside or the downside. We tried to make a decision to the upside last week and we got a nasty rejection. We're now bouncing back up, but we'll see. We will have to take out this prior week high at $100. And I am very suspicious that we'll probably see something like this. A brief spike up and another rejection. But we'll see what happens, guys. Unfortunately, oil is one of those commodities that trades primarily around news events and geopolitics, less so based on technicals. And so it makes it a very challenging trade to get into. Now let's take a look at the DXY, the dollar index. The dollar index continues to push to the upside, but I'm noticing slower and slower momentum. In fact, let's take a look at the 2-hour chart. Look at this, guys. We're now seeing a bearish double top formation on oil, and with a bearish divergence, right? Because we put in a slightly higher high right here, and we've put in a ever so slightly lower high right here. So looks to me like the dollar index might be beginning to form a very short-term top right around these levels at 110. And I'm thinking that possibly Tuesday, tomorrow, we'll see the dollar index have one last spike and the S&P have its flush down, take out all of these stop losses, and then for a nice move to the upside. And that's how I'm planning to position myself this week. Again, guys, if you're interested in following my trades, I do post every single trade and investment in real time in the Discord trading community. It's $20 a month, and it's the only way to track my trading activity in real time. And it's also the best way to support me if you want to do that. That's all I have for you today, guys. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow. Wow.